Hey, what's up, everybody? I wanted to discuss the things that are going on right now with the coronavirus and the economy. First of the things I want to cover is some of the things that are kind of making the markets move. Some of the bearish signs that we have is that there was a likelihood of there being a recession. Some people are saying there is a recession. Some people are saying we might be into a recession, but it's not officially announced, so we are not really in a recession unless it's announced by some government entity. Some department of the government has to announce that. There were some numbers of a 92% chance of a recession, but now that we have the stimulus that was announced, the $2 trillion stimulus, there's less likely a chance of a recession because that what it is. What it is just a bailout of some companies, bailout of pretty much people going into stress if there is some stimulus that goes directly into the pockets of the people, like the $1,200 checks to the people that may help people pay their rent, for those, especially for those who were unemployed. What this is just might be a temporary fix, and in the long run, what it will be is just that more companies are just borrowing money to cover their losses, and with that borrow money, what that means is that they have to pay it back eventually, and by companies having more debt, they will have to charge customers more to make up and pay up that debt. Um, by making things more expensive and without wages going up, people are going to have a hard time making payments or being able to afford those things. Maybe reducing consumerism and making less profits for companies. So it's a temporary fix that may eventually lead to a real financial crisis that will not be caused by something like a catalyst as the coronavirus. The coronavirus was a catalyst that punctured the bubble, the financial bubble that we are living in, because everything is pretty much pumped up by debt, and now we have pumped it up with more debt with the $2 trillion stimulus, the quantitative easing, and all this borrowing that's occurring. Another bearish sign, bearish, what I mean by bearish is something that's making it, that's pretty much pessimistic and that's making markets go down, is so one of the current signs is stores are slowed down. What does that mean? Are people going to get their jobs back? Are companies able going to be able to afford to pay off the loans that they have borrowed from the government if they get loans? And will companies be able to meet their bills? Will they stay in business after this? Horrible loss in consumerism worldwide and more importantly nationwide for our economy here in the U.S. We have um, consumerism has slowed down. That goes hand in hand with the stores closing down. Consumer confidence. So with people having no jobs when they got laid off, they are less likely to consume. But now that with the stimulus, it's good. So these are past things that are bearish. So we had travel bans. We still have the trade war. Um, we still may have layoffs, job layoffs, but we also have companies that are hiring, and so some of the bullish signs. Now let's move to things that are optimistic. The quantitative easing, it happened. So what I wrote right here in my notes is it is not going to make people productive in a time of a virus, but it will let companies cover their losses with cheap money. So yeah, what I'm saying with this is that money doesn't eliminate the virus. Money is not going to kill the virus. What's going to kill the virus is people following what the doctors say and maybe continue quarantine. But with the government and the Federal Reserve saying that we're going to buy unlimited amount of assets, then basically they're bailing everybody out. They're going to prop up everything. They're going to keep everything afloat. Some of the other bullish things is people are buying a lot of groceries, so grocery stores are doing good. Some consumerism is doing good. So the shift from restaurants to groceries is just a shift in where the money's going. Uh, Cases may slow down. We may see slowing down with the quarantines all around the world. We may be figuring out something of what to do. We're learning from Korea and China how they stopped and slowed down their cases and are pretty much bringing down the amount of cases that are occurring. Vaccines are being tested. That's good. There's some medicines out there that are being tested. Trump has announced there's some uh, two medicines, something chloroquine. I don't know what it's called, but that's something to treat, and supposedly that was to slow down um, the spread by treating the patients with this medicine. It's pretty much brings down the number of days that you are sick down to 6 days from, I guess, like something like 20. Um, we have test kits that are faster, which now take 45 minutes. And again, unlimited asset purchases from the Federal Reserve. Some things that we still have in questions: how is the government tax revenues going to affect government employees? Will they have? Let's continue. Will the government have layoffs? Will there be bankruptcies before they can even bail out companies? Will there be companies that are so tight in money that they will be filing for bankruptcy? And we're already at the brink of bankruptcy, and anything like this could have already stimulated that to occur. There's business refinancing, which is good or bad. It just means that they're delaying an eventual bankruptcy, or just delaying debt, making prices go up because consumers are the ones to burden uh, all the cost. Hospital personnel cases, how are they dealing with? We have to look at will the vaccine work? We have to look at our current containment system, how we're dealing with the current situation, how effective will it be, and if all the mandates are working to control this virus. The tax credits, if they are true, then it will be a positive thing. It will be bullish. The free money, how we will receive it, how will the people spend it. Obviously, people are going to be just pumping money into the economy with whatever they use it for. But with restaurants being closed, and this mandates continuing to be in place where we can't really go out and consume, that money is just probably going to go to the rents and to pay for groceries. But after that, we still have the bailout. So, um, will we have a real quarantine where it's very much just a complete shutdown? That would be very scary. Some other things that I wrote here on this paper. So I wrote yesterday, we will get stimulus and stocks will go probably only temporarily back up after they are bailed out or continue to be supported by the Federal Reserve. However much is needed, because they said that they will do it by however much is needed, however much they require to print, they will print it, and especially with zero interest rate loans that they, or pretty much the I forgot what it was, that there is a zero interest on, I guess, how much the Federal Reserve is charging banks, or near zero actually. The government will also likely be bailed out, I'm guessing. And what the previous sentence is, we will get stimulus. We already did. Today I confirmed in the morning. I wrote this yesterday. To sum it all up, they are putting a bigger band-aid on an infected wound. The infected wound is the fake money, the injection of fake money. So besides the virus, there is a bigger virus, which is just printing money and continued debt. Debt could be good if you're a real estate person or own a business that knows how to manage debt so that it benefits you when it comes to taxes. But for the people who are using debt to cover their losses, to cover any expenditures, it's going to bite them in the butt eventually, and it's only going to lead to an eventual bankruptcy, or yeah, something like that along those lines. This means that, like always, inflation will continue possibly at a faster rate than previous years, because it will be more, which will be crazy. Wait, what I put? With more money to lend out, there will be crazy irresponsible spending, and all that interest and cost gets pushed to the consumer in the form of higher prices and higher taxes. So some things that I would like to learn more about is how is quantitative easing being implemented, and how are the government bailouts handouts being implemented, how they go hand in hand, how do they work together, and the difference. That's something I still gotta learn. um, so also, this fast inflation affects those that live paycheck to paycheck the most, because prices of goods increase faster than their wages. But for those people that are saving money to maybe buy a house in the future, could get away with buying stocks. Maybe those are risky. Stocks and all financial assets are risky, to protect yourself against inflation. If you don't know how to pick stocks, then you're probably not that good. Some people go with buying physical gold and then eventually reselling it, because gold is pretty good. If you look at a chart of gold from the beginning of the 20th century, you see it going up against the dollar. Um, Also, some questions I may be having is a all digital monetary system like China going into effect in the US eventually. Why do I say this is because that would kind of make sense for the government to do, because now they will be able to pump money directly into people's pockets if they need to prop up the economy by using fake money. Just put it into their digital accounts. No need for cash. Just use your digital accounts to make any purchases you may need in case you are going through a rough time. But nonetheless, it's gonna affect people in the long run, because we will have a form of inflation that's almost like a catch up. We're playing catch up, catching up to this inflation using fake money. Some things that are interesting is that the government questions the Libra of Facebook. Hey, maybe the government is liking what the Libra is going to be doing. They might be interested and may work with Facebook to, I don't know, work on how to implement the Libra. Also, what I wrote is, will there be such drastic changes that we will want to protest in the streets, but we won't be able because of COVID-19 mandates? All I'm saying is, if the government does something that's really spooky to the people, like, and drastic changes occur that kind of make people mad, I don't know what that will be. Something along the lines of monetary spending, monetary uh, mandates. I don't know what it is, but it could be, this is conspiracy wise, like if something really bad happens and we want to protest, we won't really want to, because the COVID-19 scare, we're all scared and we want to stay in home. I deliver packages, I see people being scared. Uh, so also, if y'all know any government monetary sector, like a department that deals with monetary technology, I would like to know in the comments below. Uh, duh, 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 duh. Yeah, I think that's it. What I have for what's going on today. Essentially, the government and the Federal Reserve is for propping up stocks, propping up the economy. As I see here on my charts in the stock market, we see the SPY going up 1,200. No, not 1,200. 13 points, which are kind of in the Dow Jones. That's about 1,400 points up. Yesterday we were up $2,000, 2,100. So in 2 days we are up $3,200, which is a huge bounce. If we look at the yearly chart from the bottom to its lows, we see this dramatic bounce, which is almost looking like a bottom, as you can see here. I don't know if you can see it. So right here, this is this big bounce right there. There was a bounce in the past which led to a huge decline, but this bounce, if it continues, now that we got the news, if we look at the news that is on here, we see something like Bernanke on how Corona is the first from the 2008 crisis, used military imposed restrictions on the movements of thousands of military personnel due to coronavirus. That's different. Something with the economy. And warns against fast tracking coronavirus stimulus bill drafting error. What? I don't know. Anyway, that's already in the morning. We have news such as 2 trillion coronavirus pass Senate as lawmaker watchers reached agreement. At last, we have a deal. After days of intense discussion, the Senate has reached a bipartisan agreement on a historic relief package for this pandemic. Let's see what I want to see what Bernanke says, but let me see for anything else. Mm, I don't know. Let's see. Let's see what Bernanke says. So, the 2008 financial crisis was a result of the collapse of the financial system, but coronavirus could have the opposite impact of trickling its way towards the financial system, according to former Fed Chair Bernanke. That's true. Different type of financial crisis. Um, the 2008 financial crisis started with the implosion of subprime mortgages and the loss of confidence in the financial system. Bernanke said Wednesday, when the credit broke down, the damage at banks made its way to the economy. But the coronavirus is forcing a shutdown of the economy. It implies banks that lend to companies that are on the pause or closing down are taking losses. Fortunately, Bernanke said the banking system as a whole was in a much better position, strengthened compared to 2007, so it could stand up under the strain and become a positive force in returning to normalcy. Employment. Federal Reserve Bank St. Louis President Jim Bullard told CNBC prior to Bernanke's interview he expects the unemployment rate to soar to 30% by the second or third quarter, only to return it back to 4% by the end of the next year. By the end of next year. Bernanke said that this scenario is possible if there is a very sharp and short recession. The notion of a snapback in the economy depends on the courses of the virus itself, which dictates how long the economy will remain in shutdown mode. Over this period, the economy needs to, at the very least, remain functioning, and business needs access to funding to survive the short storm of a reopen in the future. Oh man, I mean, a lot of things are very uncertain still because the more companies are borrowing with longer delays before they start opening, they're going to be incurring a lot of borrowed money. Will it be forgiven? I don't know. Those are things we still don't know. Let's say they incur so much debt with even little interest, they still have to pay that debt with, but the fatter the debt, doesn't matter how small the interest is, it's gonna be a substantial uh, payback payment with the more we wait. The more we wait, the more money they're gonna be borrowing to cover their losses, and eventually, this virus um, delay will lead to a delay in paying back their debt and maybe loss in profits. With loss in profits, uh, companies have to lay off their workers. Oh shoot, I gotta go to work already. I'll see y'all on the next video. Bye bye.